Hey everyone, and welcome to the Money Girl podcast. I'm Laura Adams. I'm an author, speaker, and consumer advocate, and I've been writing and hosting the show since 2008. If you're a new listener, welcome. I am really glad you're here. This show is for you, so be sure to let me know if you have money questions. Over the years, I've covered a lot of ground by doing close to 650 shows now, so there is obviously a ton of information in the archives. But I also love putting a fresh take on older topics, which is really what I'm doing today. The coronavirus has upset lives and livelihoods all over the globe. And while insurance can't keep you from getting COVID, having the right types of insurance can definitely reduce your financial risk as the virus spreads. I don't think there's ever been a better time to protect your health, life, property, and business with the right insurance. So that's what we're going to be talking about today. And while I've done many shows about insurance, this podcast will review 7 insurance mistakes that you might be making during the pandemic. I'm seeing people making a lot of these right now. You're going to learn how to face new risks and challenges with the help of different types of affordable insurance. So let's get to it. Here's some detail on each mistake you should avoid to make sure that you and your family stay safe during the pandemic. Mistake number 1 is skipping health insurance. This is probably the biggest no-no. The coronavirus has changed the health insurance landscape in some pretty drastic ways. If you've become unemployed or you have work hours cut and maybe you've lost that employer-sponsored health insurance that you used to count on, don't go without coverage at a time when you may need it the most. I know that it can be expensive, so let me review several ways that you can get affordable health insurance. The first is through Medicaid and CHIP, which stands for Children's Health Insurance Program. These may be options to get free or low-cost coverage if you cannot afford health insurance. These programs allow you to get coverage at any time of the year, so it doesn't have to be a certain enrollment period. But the coverage and the price does depend on your income, your family size, and where you live. These programs are regulated at the state level, so it's going to depend on where you live. You can learn more at the Medicaid website at medicaid.gov. Another option, if you're young, is your parents' health plan. This may be an option if they have coverage and you're under age 26. And of course, if they're willing to have you on their plan. This is available even if you're married, you're not living with a parent, and you're not even financially dependent on them. They can cover you until your 26th birthday. If you lost a job, you might want to look into COBRA coverage. This is typically available when you leave a job with group health insurance. Whether you quit, you got laid off, you got fired, it doesn't matter. COBRA is there. It's a federal regulation that gives you the option to continue your employer-sponsored health, dental, and vision insurance for a certain period. It's typically 18 months. However, if you've got funds in a health savings account or HSA, you can use those funds to pay your COBRA premiums. COBRA is expensive in a lot of cases because you're paying 100% of the premium, and in a lot of cases, employers are picking up or paying part of your insurance premium. So when you start paying 100% of it, it can be a lot more than you think, but it's going to be really good coverage. Another option is ACA coverage. The ACA is the Affordable Care Act. These plans are available through the federal health marketplace or through state online marketplaces, depending on where you live. You can also get coverage through insurance brokers and insurance websites. If your income is below certain limits based on your family size, you can qualify for a federal subsidy. That will reduce your healthcare premiums and make them more affordable. So no matter where you live, you can begin shopping at the federal exchange at healthcare.gov. And if your state has its own exchange, healthcare.gov will forward you there. Okay, so that's the first mistake, is just, going without health insurance completely. The second mistake is not using telehealth services. If you have a high deductible health plan, it typically only covers certain preventive care costs, such as an annual physical or vaccinations, before you meet your annual deductible. However, the CARES Act, which is the coronavirus regulation, makes it easier to use telehealth services because your plan must cover it cost-free before your deductible is satisfied. Now, if you've got other types of plans like HMOs or PPOs, they also have to waive any cost sharing or copay when you use remote telehealth services. So it's a really good time to get comfortable with using telehealth services. But the relief is only temporary. It's only available for you in 2020 and 2021 unless the regulation gets extended, which is possible. So don't forget about using telehealth services. It really can save you a lot of money if you've got non-emergency issues or just medical questions that you want to address with a doctor online. All right, the third mistake is only getting minimum car insurance coverage. During tough financial times, it can be tempting to cut your auto insurance coverage or even drive uninsured. But I want you to remember that it's against the law to drive without having the minimum liability coverage for your home state. However, since many drivers are uninsured, you should never go without uninsured motorist coverage. This is an addition to your policy, and in some states it's required, but in some states it's optional. It protects you from a driver who hits and runs, or a driver who is uninsured or underinsured for the damage they cause you, your passengers, and your car. According to the Insurance Information Institute, 13% of drivers are uninsured nationwide. And my home state, Florida, has the highest number. Almost 27% of drivers are uninsured. And this data is from 2015, which is the most recent information. So I can almost guarantee you, due to the coronavirus-related financial hardship going on, those numbers are probably much higher now. So if you're thinking about dropping coverage, don't drop your uninsured motorist coverage. You might consider collision or comprehensive. Dropping those is somewhat common, especially if you have an older vehicle. These coverages repair or replace your vehicle if it's damaged or stolen after paying your deductible. So reducing or eliminating those coverages might make sense if your car isn't worth much, like maybe it's worth less than $1,000. A good rule of thumb is to drop these collision and comprehensive coverages if the annual cost of paying for those premiums is 10% or more than your car's cash value. So what you could sell that car for today. Another way to save on auto insurance is to increase your deductibles or even bundle it with other coverage, such as your home or your renter's insurance policy. Mistake number 4. Not purchasing a non-owner's auto insurance policy. So let's say you sold your car because you can't afford it, or maybe, you're working from home now, so you're not driving anywhere, or maybe you just tend to borrow friends' cars or you rent cars when needed. Don't forget that you still need the protection of a non-owner auto insurance policy. This coverage gives you the liability protection that you need when you drive a car that you don't own, or even when you're a passenger in someone else's car. Here are some situations when you need non-owner car insurance. You rent a car and you don't already have insurance on a vehicle that you own. Let's say you use ride-sharing services such as Uber or Lyft. That coverage is going to protect you when you're a passenger in that Uber or Lyft. And as I mentioned, you borrow cars from family, friends, or neighbors for either long or short trips. Those are all situations when it really makes sense to have a non-owner auto insurance policy. Mistake number 5. Overlooking a renter's insurance policy. According to the Insurance Information Institute, a surprisingly low number of renters have renter's insurance. Only 35% of renters have it. Whether you mistakenly believe that your landlord is responsible for your personal belongings, they are not, or that you don't have enough to insure, believe me, you probably do. you should have a renter's policy. Landlords only have insurance to protect the structure of a home or an apartment that you rent. They don't have coverage for your personal property, nor do they protect your liability if someone gets injured accidentally in your rental. A standard renter's policy offers a lot more protection than many people think. Not only does it cover your possessions if they're stolen or damaged from a covered event, such as a water leak, a fire, or a natural disaster, but a renter's policy also pays living expenses if you have to move out while repairs are made after an insured disaster, such as a tornado or a fire. And even more important is the liability protection that I mentioned. If you get involved in a lawsuit related to property damage or medical injuries, either inside of your rental or out somewhere in the world, anywhere on the globe, you would be covered for liability up to your policy limit. So that's really important protection. Renter's insurance gives you a whole lot for the money. It's probably more affordable than you might think, too. It costs only an average of $188 per year across the nation. So it is very affordable, and it might even be more affordable if you bundle it with your auto insurance. That could even reduce the cost. All right, mistake number 6, working from home without commercial coverage. Due to the stay-at-home mandates during the pandemic, most people who can work from home are working from home. If you're self-employed as a solopreneur or you operate a small business from home, be aware that your home or your renter's insurance excludes most home-based business activities. Let's say you keep inventory at home in your garage or in a spare bedroom, or you have special business equipment like a fancy printer or a computer that you brought from your office to work on at home. These expensive items would not be covered under a standard homeowner or renter's policy. So make sure that your business assets and liability are protected by having a separate commercial policy or even adding a home business rider or endorsement to your existing renter's policy or your existing home insurance. The type of business coverage you need varies depending on the industry that you work in, whether you drive for business purposes, whether you see clients at your home, and the value of all of your business assets that you have at home, and also how much potential risk you have. And it could cost as little as $150 per year. So you want to check with your existing insurance company or even a trade association for your industry about where to get coverage. It's really important and probably a lot cheaper and easier than you think. Mistake number 7, thinking you can't get life insurance. I know it's not fun to think about death and what could happen to your family if you weren't alive. If your surviving spouse, partner, children, parents, or other dependents, or even business partners would be hurt financially after your death, you need life insurance to protect them. Think about how your survivors would care for your children and meet financial obligations without additional income. Consider how your children would survive if you and your spouse or your partner died at the same time. If you've been procrastinating getting life insurance or increasing your current coverage, think about the legacy that you want to leave. The good news is that term life insurance is affordable and it's still readily available even during the pandemic. For example, a $500,000 payout for your family could cost about $200 a year if you're middle-aged and in relatively good health. It's easy to get free quotes and shop and compare prices. A good place to start is bankrate.com. All right, let's recap the 7 mistakes. Number 1, skipping health insurance. Number 2, not using telehealth services. Number 3, only getting minimum car insurance coverage. Number 4, not purchasing a non-owner's auto insurance policy. Number 5, overlooking a renter's insurance policy. Number 6, working from home without commercial coverage. And number 7, thinking you can't get life insurance. If you're doing any of these mistakes that we've covered, I hope this show will help you understand how to beef up your insurance and make sure that you get a little bit more protection for you and your family. In a lot of cases, it's more affordable than you might think. And the whole purpose behind insurance is to give you peace of mind that whatever happens, you have protection financially. While you can't eliminate all risk, insurance is there to help reduce financial risk in your life. If you have a money question or a dilemma that you're dealing with right now, a great way to keep the money conversation going is with a terrific community, and it's my Dominate Your Dollars Facebook group. It's a really great group of people. They are helping each other, answering questions, and really bringing a lot of important issues to light. So to request your invitation, I want to invite you to visit Dominate Your Dollars on Facebook, or you can send me a text message for immediate access. Just text the word dollars, DOLLARS, to the number 33444. I hope to see you in the group. You can also visit lauradadams.com to email me your money question. You can even record a voice message that I may be able to use in the show. And if you don't want it in the show, just say so and we won't use it. Just call 302-364-0308 to leave your message. That's all for now. I'll talk to you next week. Until then, here's to living a richer life. Money Girl is produced by the audio wizard, Steve Rickyberg, with editorial support from Karen Hertzberg. If you've been enjoying the podcast, please take a moment to rate and review it on Apple Podcasts. That's an easy, free way to give back, show your support, and help new listeners find us. You might also like the backlist episodes and show notes that are always available at quickanddirtytips.com.